Hey guys, today we want to explore an emerging industry, what we call the buy now pay later market, that we have seen some strong traction lately. Well, if you are not a frequent shopper online, then this may seem like an unfamiliar ground. Otherwise, you would have probably heard of Affirm, Afterpay or Klarna depending on where you are located, and basically they allow you to buy now and pay later. Or perhaps you may also have been exposed to tech giants like PayPal, Stripe or even Amazon offering their own versions of buy now pay later facilities. Initially, I don't really quite appreciate how all these buy now pay later installment plans for the small ticket items will actually help consumers per se. But on a closer look, this buy now pay later model actually mimics very closely to the credit cards we are using today. Given that there's already a huge and established market for credit cards today, together with an increasing adoption of online payments, this buy now pay later way of transaction does look promising after all. So today, let's take a look at Afterpay, one of the leading buy now pay later companies in the market today. So the company was originated from Australia in 2015, and since then it has expanded to 5 key countries of operations and become one of the top 50 largest companies in Australia by market capitalization. The whole idea of Afterpay's business is pretty simple. Effectively, they partner with merchants to have their payment method linked. Customers can choose to use Afterpay's payments of 4 installments over a 6 weeks period. There's no interest charged if you pay on time, just like how credit card works, so the key is to pay on time and avoid these late charges. However, an important feature that's different from traditional credit cards is that Afterpay caps the late fees at 25% of the purchase price. And if a customer missed a payment, the company will pause the individual's accounts until they are back on track. Perhaps at this point in time, you will still have some question marks about Afterpay's business model. For example, is the interest-free loan sustainable? Is the company profiting from these late fees? And who are the users? Are there any tractions? So here we will answer these questions one by one. Over here you can see that Afterpay generates less than 14% of its income from its customers in fiscal year 2020. And these are namely late fees charged on users who miss their payments. Comparatively, credit card companies generate around 80% of its income from its customers. That's a huge difference. So over here you can see that it's clear that Afterpay does not rely on late fees of users. Now you may ask, yes, the company is not depending on the late fees, but are all these receivables turning into bad debts that cannot be recovered? Let's check it out. From the chart here, you can observe that both the late fees and gross loss as a percentage of underlying sales have been decreasing over the recent years. And that's commendable given that the underlying sales has been growing very quickly in the recent years. So not only does it imply that there's better risk management and control to reduce gross loss inherent in this business model, but also it also proves that Afterpay's objective of not relying on the late fees is working as well. But what's better, as you can observe from the chart, is that there's a behavioral shift away from traditional credit and use of cash to more debit usage due to the increasing purchasing power of the current generations. And the company is well positioned to benefit from such a tailwind of behavioral change. Just like how credit card companies are offering incentives to use their cards for purchases, I can see where this buy now pay later business model is going as well. By partnering with merchants and brands, big or small, they provide incentives and discounts to consumers when they use the Afterpay's platform. It is in fact effectively trying to replace the credit card business, or at least capture some share from them. And of course, not forgetting the shifting consumer behavior towards online shopping, this tailwind will accelerate the adoption of this buy now pay later model moving forward. And Afterpay stands to benefit from such a tailwind. And now we can look at the business performance. But before that, let's take a look at the company's operating segments. As you can observe here, Afterpay segregates its income into 3 segments: Afterpay income, pay now revenue, and other income, which is mainly late fees. As observed from the table, Afterpay income is the key contributor to the company's top line. This is effectively the commission cut from the merchants, and in exchange for that, Afterpay will assume all the non-payment risk from the consumers. As for the Pay Now segment, it only makes up about 3% of the company's revenue in the fiscal year of 2020 that ended on June 2020. It is primarily a transaction cut by Afterpay, but without the installment features of the key Afterpay service. And finally, for its other income segment, it is namely late fee charges used by Afterpay as an incentive to encourage end customers to pay their outstanding balances as and when they fall due. So based on the fiscal year 2020 results, it contributed less than 14% to the company's revenue. Now let's take a look at Afterpay's geographical breakdown of its business. Observe that its core operation in ANZ, comprising of operations in Australia and New Zealand, have always been the key driver of its business. So based on the latest half-yearly financial report for the first half of fiscal year 2021 that ended on December 2020, the ANZ segment contributed 49% of the underlying sales, equivalent to 4.79 billion Australian dollars. However, we are seeing exploding growth of its business in the North American segment, almost catching up with the ANZ segment. and it is now contributing 43% to the underlying sales, equivalent to 4.25 billion Australian dollars. And finally, we have the smaller operation in the UK contributing 785 million Australian dollar or 8% to the group's underlying sales. But this segment is growing very fast as well. Observe that its underlying sales has grown 288% year on year. And based on the fiscal year 2020 result, we saw Afterpay's momentum continue to build up. Underlying sales surged 112% to 11.1 billion Australian dollars, brought about by similar growth in the number of customers and merchants. And the matrix showing the retention of its users is showing very positive result as well. The percentage of users that continue to transact on the platform over time has been rising. Similarly, the percentage of customers spent in subsequent months compared to the first purchase has been increasing substantially as well. So effectively, what this means is that Afterpay's users are spending more frequently and spending more in terms of dollars value on the platform, and this shows proof that the company is providing valuable service to its customers. In terms of the company's financial performance, it should be no surprise that Afterpay is still operating in the red for the fiscal year of 2020, as the company is still investing aggressively to grow its business. So for quick estimation purpose, I think we can assume a 20% net profit margin in the long run. In terms of growth, the buy now pay later market is expected to grow at 21.2% compounded annual growth rate from 2020 to 2027. Then again, we saw Afterpay's latest half-year result in the first half of fiscal year 2021, showing that the company continued to experience strong growth. The half-year revenue is already coming in at 374 million Australian dollar. At this rate, we can expect the full year revenue for fiscal year of 2021 to be likely at 50% increase from the fiscal year of 2020 top line of 519 million Australian dollars. For projection purpose, let's use both the constant growth rate and the step-down growth rates to estimate the earnings by 2027. So under the step-down growth rate scenario, we assume that Afterpay will grow at 50% in the coming year, then its growth rate will reduce by 10% a year and eventually level off at 20% till year 2027. Whereas under the constant growth scenario, we assume the company will just grow at 20% a year all the way till 2027. And since it is difficult to foresee the future of the company or the buy now pay later market thereafter, since it's a growing industry, let's use two different multiples to derive the target share price in 2027 from the projected earnings we computed. So in this case, we will use a price to earnings of 30 and 50 for an average and slightly more bullish projection respectively. So based on all these estimates and projections, our target share price for Afterpay will be in the range of 38 to 101 Australian dollars. So given that currently Afterpay is already priced in the $100 range, I don't see sufficient margin of safety based on the projection we have done here. Well, perhaps the company may grow faster or longer than what we have used to estimate for our projection here, but these figures are what we have researched and what we are comfortable to use for our projection here. Nonetheless, I have to say that this buy now pay later model is very interesting and that Afterpay is well positioned to ride on the wave of this behavioral shift in the online payment market. It may not be particularly high-tech per se, but its service does provide value to the consumer market, just like how credit cards do. Anyway, check out the link to our website where we detail a more thorough analysis of the company. For now, while I think that Afterpay's share price is a bit high at the moment, I'm definitely adding the company to my watch list. Perhaps it may be the next Visa or MasterCard of tomorrow. Let me know your thoughts on this and share with us in the comment below, and remember to subscribe to our channel so that you can be informed once our next investing tip is out. In the meantime, check out the recommended videos here to continue learning so that you can make better investment decisions. Keep learning and happy investing, and we'll see you soon.